Your quarterly performance. Help us understand what's really led to this muted profit growth as well as NII, and would you say that this is a one-off and you hope to better this performance going forward?
Yeah, good morning. The biggest positive for this quarter that we witness is the improvement in disbursements. For current quarter, if you see sequentially compared to the previous quarter, there is almost 26% increase in the fresh approvals, there is 24% increase in the disbursements. Even on year-on-year basis for the quarter 2, if we compare, there is something like 7% increase in the quarterly disbursement numbers. That is a big positive because we are worried more about that when the sector is going to correct. So, this is a very, very big positive, and current quarter our disbursements, this has been one of the best so far in the history of Canfin. So, the outstanding growth 17% plus that we are continuing. As far as the numbers are concerned, where the profits are getting impacted, the margins are, the NII is getting impacted is, even though we are holding onto the margins of around same 3.17, 3.18%, above 3%, the NII is impacted mostly because of the increase in cost. If you see the interest earnings have gone up by 12%, but the interest expenditure has gone up by almost 18%. That is where really the NII is impacted. But going forward, we are quite positive that this is one of, or this season is, this time is going to be better only going forward, because we have been in a position to pass on the additional interest burden that we have been taking on our borrowings. To a great extent, a lot of corrections is happened as far as the industry is concerned, and we are quite hopeful that the rundown on our book in terms of the balance transfer, those are going to settle down in this quarter. And this quarter we will see, because this is the festive quarter, and the best quarter it is considered always that quarter 3 is the quarter for pickup. The maximum takeoff takes place during this quarter, maximum home buying takes place during this festive season of Dasera to Diwali to the ending with Christmas, and it continues, the subsequent disbursements, part disbursements continues in quarter 4, which is mostly a consolidation phase. So, we expect that the numbers will take care of the NII growth going forward in quarter 3 and quarter 4. And as far as other ratios are concerned, if you see the cost has gone up almost by something like 10 bips and yield is static there. That is where the spread is impacted, even though we are in a position to hold on to the margins, but as a spread, the spread has suffered because of the rise in the cost. That is primarily because of the rise in cost in the bond yields and the market borrowings. Going forward, we are hopeful that things will be better, and for Canfin in particular, we have got adequate credit lines, those are at reasonable rates, and cost of funds wise we are comfortable. We expect both in terms of liquidity as well as cost of funds, the new credit lines those have opened for us. I think that is going to take care of the cost part in quarter 3 and going forward.
Okay. If I look at your disbursements on a sequential basis, they've come in higher by a good 24%. But what explains the muted loan growth, and that stands at 17%? And again, do you see a marked improvement coming in the next quarter?
Yeah, if the disbursements are adequate, if you are seeing that I disburse something like 1,443 crore is the disbursement for the quarter, whereas the increment in outstanding is something like 740 crores. It means almost 700 crores that is being somewhere either repaid, prepaid or being taken over. That takeover part is going to cool off in current quarter and going forward. That is what we are expecting, because the HFCs, the way things are happening now a time has come again where you will have to think of that, yes, small is beautiful in this sector, and being a niche player restricted to retail and purely retail home loans, it pays off. That is where we see that, yes, we are having an edge over many in the housing sector.
How much rundown are you seeing on your books? And
this is for another thing is, No, yeah.
No, complete
Yeah,
your
please
point
go ahead.
first. Complete your point first, and then we'll take it forward.
Yeah, what I was telling is per month usually my sanctions is to be something like 500 550 crore. The disbursements will be in the range of 400 450 crores and that way every month it should go increase in the same proportion. Even though the repayment that I get is something like around 275 to 300 crore in a month, that is the usual one. But the 150 crore summer, 100 crore around loss is there, the pilferage is there, that happens mostly because of the balance transfers. That has in last 1 year or so, it has been a menace really. I think this is going to cool down going forward. So, whatever we disburse, and basically because Canfin is into affordable segment, mostly to LIG and the lower MIG segment, that is where we feel like that going forward the growth will be there. This is the growth sector where we are very well placed, and it should be the time for Canfin now.
Yeah, we wish you that as well. 4% up on the stock as you speak. What is the rundown on your book? If you could share those numbers and why you seeing such a rundown, Mr. Kumar, if you can hear my question.
Yeah, it used to be the average rundown on our book is something like 17-18%, but in last few quarters, last 4-5 quarters, we had been witnessing something above beyond 20% rundown on our book.
Okay, and would that increase? Like, how do you explain such a big margin on rundown?
Yeah, it should subside going forward. Now that the changes, the recent happenings in the housing sector, in the NBFC sector, this is a time really that all those retail players, very retail players like Canfin with a very strong asset quality are going to benefit. Where I really make my margins and where I, despite the thinning spread, where we make the margins, and despite a small NII growth, where we make the profits is mostly because of the operating efficiency and the very good asset quality. If you have seen, the best thing for this quarter again is the asset quality has improved from 0.66% gross NPA, it has come down to 0.63%. The net NPA from 0.44, it has come down to 0.42%. The cost income ratio for the first time, it has come below 14%. So, that is where it is that where we make the our PBT has grown by almost 12% and the PAT has grown by 8% for the quarter, and for the half year if you see, it has grown by almost 9% and one of the best numbers that we have posted in recent quarters.